Greetings traders, in this video I'm going to be breaking down the Judas swing by ICT. This is my primary trading strategy. This setup forms about 2 to 4 times a week, and if you follow these steps, this is all you need to get funded and start making payouts. All right, it's very simple. Also, I only trade this on the NQ, I only trade this on the 1 minute, and these are my rules. The very first step is we want to mark the high and low between midnight to 8:30. So these are the trades that I took this most recent week, this previous week, or current week rather. And so midnight to 8:30. So here's midnight, this vertical line. Here's 8:30. Here's the highest high put in at 6:23. Here's the lowest low put in at 8:10 a.m. All right, so that's our first step. Mark the high and low between midnight to 8:30. Next, we want to wait for one of the sides to get swept. This is also called a liquidity grab. So we either want the highest high to get swept or the lowest low to get swept between midnight to 8:30. And so you can see right here, this 9:30 candle right here sweeps these lows. So that's our liquidity grab. Next, we want to wait for a market structure shift. So market structure shift is a candle close above the most recent swing high, right? So this right here, after we get a liquidity grab, we're looking for a market structure shift or a candle close above this swing high, right? So here's our swing high. We need a market structure shift. You can see that we get close, but we can't close above this swing high, right? And so once we come right here, almost make a swing high. I was prepared. I thought this fair value gap was going to hold. I'm waiting for this push right here to close above this swing high right here. Right? This would be the new market structure shift. Right? I'm waiting for a candle close above this swing high, a candle body close above the swing high, right? But it doesn't happen. We push down further, right? So after we push down further, we make this swing high, right? So now I'm waiting for candle close above this swing high. You can see we don't get there. We come in here, we kind of settle, consolidate. We have a push, right? So we're making lower highs, lower lows, lower highs, lower low, lower high, higher low, ding, 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 ding. You see right here, oh, we made a higher low, right? See how we're making lower lows, lower lows, lower lows, and a slightly higher low right there, right? And then here is our swing high. So there's our swing high. And then there's our market structure shift right there. So that's how market structure shifts work. Replay that because this is the most important part of the video, understanding how to determine what a market structure shift is. And then enter on the deepest fair value gap in the market structure shift between 9:45 to 11 a.m. So you can see right here in the market structure shift, we formed a fair value gap right here. We also formed a fair value gap right here. If you don't know what fair value gap is, it's a 3-candle pattern where 1 candle, 2 candle, 3 candles, the top of the first candle wick does not intersect with the bottom of the 3rd candle wick, leaving in a fair value gap, inefficiency, whatever you want to call it. Right? So let me show that for you guys right there. So there's the deepest fair value gap, right? We have a fair value gap right here, but I'm targeting the deepest fair value gap, right? So if it's between 9:45 and 11, I want to enter in on the top of this fair value gap. So you would have gotten tagged in at 10:42 a.m., which is within our kill zone. And then you want the stop loss to cover the market structure shift swing high or swing low, right? So there's a swing low right here. So that we cover that. And then next, 1 to 2 risk reward. So boom, 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 boom. So roughly that's the setup, right? So that's 35 points, $700, something like that, on 1 NQ, right? So this works for ES, this works for NAS 100, Euro USD. I just prefer NQ, right? So just to review the setup again, and I can remove this now. So we want to mark the high and low between midnight, right? Midnight and 8:30. There's the highest high. There's the lowest low. Wait for one of those sides to get swept. Liquidity grab. Here's our liquidity grab. Then wait for a 1 minute market structure shift, right? We need to close above the most recent swing high, right? Close above most recent swing high. Close above the most recent swing high. No. Close above the most recent swing high. Yes. Boom. Right there. We get our market structure shift. We want to cover the swing low of the market structure shift and then target 1 to 2 risk reward. It's as simple as that. And I have another example that occurred today. Now, personally, I did not trade this because, well, I'll show you in a second. but it's so this is a completely different chart. This is today's price action on the 18th. So I was showing you yesterday's price action. So this is the lowest low. This is the highest high between midnight to 8:30. Let me put up the rules again for you guys. Rules, checklist, whatever you want to call it. All right, so we can see that we had relatively equal lows right here at 135, right? Or 409, whatever you want to call it. These are our lows, these are our highs. And then we get a liquidity grab at 847, right? We taking out the lows, right? So after we take out the lows, we want to wait for a 1 minute market structure shift, right? So after we take out these lows, we're looking for a 1 minute market structure shift. If you get a bullish 1 minute market structure shift before 9:45 to 11 a.m., I don't take it. Some people do take it. I don't take it. So we're making lower highs, lower lows, lower highs, lower lows. Do we almost get, so this wick right here at 9:30, we almost, at one point we looked like we're going to close over this swing high, but we don't. We shoot down some more, consolidate. So this line represents previous day low, which is a great, this can act as also as a liquidity grab in and of itself, right? So that you have double confluence there. So we some consolidating. There's our lowest low, right? We need to close above the swing high. Some people would call this a swing high, right? And right there. Personally, I wouldn't call this a market structure shift. I would consider this the swing high. Also, when you have a market structure shift and a opposite fair value gap directly above it, I just don't like it. I've failed a lot with those, right? So we come up here, we come down lower. So we make a lower high, a lower low, right? Or a higher low. So let me start back, right? Lower high, lower low, lower high, lower low, lower high, lower low, higher low, higher high. So I hope that makes sense. So here's our candle close over, right? And this one, the reason why I wanted to show you guys this one is because I just missed out on this trade, and it was a bummer to watch this trade go on without me. But you can see right here, there's the deepest fair value gap, right? So we do have a fair value gap above this, right? Which is where price is rejected off of, right? So you can see right here. I did not get tagged in to this trade because I was waiting. I had my stops like this, right? Targeting 1 to 2. And you can see that we just hit this first fair value gap and then pushed off, right? We kind of basically bounced off of the top of the swing high, this breaker or whatever you do. I don't trade breakers, but that's what this is, right? And I literally missed this trade by a point, but sometimes that's going to happen because you're going to get the best risk to reward targeting a lower fair value gap, because if you're targeting a lower fair value gap, you can have a smaller stop loss, right? So I just missed that trade, but I wanted to show that the setup still can work even outside of your kill zone. Now, do I suggest you trade it outside of your kill zone? No, but I just wanted to show you guys that it still works, right? So this is because this fair value gap never got mitigated, right? It never got touched, right? This is an untouched fair value gap. So mark the high and low between midnight to 8:30. Wait for a liquidity grab. Wait for a 1 minute market structure shift with displacement, right? We see a displacement, fair value gaps. Enter in on the deepest fair value gap. We missed it by a point, literally a point. Stop loss cover the swing low, targeting 1 to 2 risk reward. Now we see we didn't enter that fair value gap that was formed at 9:53 until 11:17, which is 17 minutes past my kill zone. Now, recently I've been exploring trading up until 11:30, so potentially this could be a valid trade for some of you guys if you guys want to extend to 11:30. But I have yet to gather the data if that is a better edge or not, if it's going to give me more profits than losses. But this is the setup. This is the Judas thing. This is what I trade primarily every day. This is my main strategy. And these rules right here, this is all you need to be profitable. So I hope this was helpful. If you guys have any questions, drop a comment, and I'll see you in the next one. Peace.